So look at the smile on Alex Karp's face. So this is probably how most Palantir investors feel after feeling vindicated and being proven right on their thesis on Palantir being the superior AI company right after this most recent earnings. So if we were to just take a look in the previous price action, over the last 5 days, Palantir is up a whopping 45.68%. And on the past 1 year, it's up a grand total of 187%. Yes, you've heard it right, 187%. So what exactly transpired over the last 1 year or so? Let's investigate closely in the most recent earnings report. And before we begin, on behalf of Piranha Profits, I'd like to wish everyone a prosperous and healthy Lunar New Year, and that all of you will keep winning in the stock market in 2024. I think this is just a very brief overview in their most recent quarter ending December of 2023. On the top line, they've grown their most recent quarter's revenue by 20% year on year, and on a full year basis, they grew it by 17%. On the bottom line, I think they also have very spectacular margins to show to investors. Income from operations, 11% margin. Adjusted income from operations, 34%. Adjusted free cash flow margin, 50%. Adjusted EBITDA, 36%. So these clearly screams to investors that, hey, Palantir is a software company at its core, and they're able to print such monstrous margins in comparison to even their big tech counterparts. Now, moving on to several highlights that they actually posted. So US commercial revenue, which actually slowed down significantly over the last 2 or 3 quarters, has regained some sort of vitality, and they are currently up 70% year on year to $131 million. They essentially closed 103 deals over $1 million, and it is 2x the number versus a year ago. And in terms of their US commercial customer count, they actually grew 55% year on year and 22% quarter on quarter. And more importantly, they have achieved the 5th consecutive quarter of GAAP profitability. And GAAP means generally accepted accounting principle with a 15% margin. So there's probably very little things to nitpick in Palantir's most recent earnings results. But I think we should go back to the heart of the problem to identify where Palantir stands in terms of their economic mood today. And is the results that they produced in the most recent quarter actually sustainable or not? They essentially blew expectations out of the water. They delivered revenue of $608.4 million versus the $602 that was expected, and the full year guidance is between $2.65 to $2.67 billion. And if you were to compare it on a year-on-year basis, it's up around 19%. Now, I think here's the game changer for Palantir in their most recent earnings quarter. It's essentially this idea of an AIP bootcamp. This is just a quick context of it. So AIP is basically Palantir's artificial intelligence platform. And why this bootcamp is a game changer? Because according to Palantir's disclosure, they allow for existing or even prospective customers and client base to arrive at a use case within 5 days. And this allowed them for a hands-on keyboard experience, allowing new customers to build alongside Palantir engineers and to really understand how to apply AI, develop initial use cases, and to onboard and train their own model, and to essentially lower this first hurdle and allow for these enterprises to get their first win and to see how impactful and how important Palantir's AI software is. So this is a radically new approach to acquiring customers, and it's starkly different from their initial strategy of employing a huge sales force. So I think this new approach is creating seismic waves in the entire data analytics industry, and it essentially shows in the results. Palantir has closed 103 deals that are more than $1 million in the latest quarter, and they have over 560 bootcamps conducted in the last 4 months. And I think one of the most important KPI of this bootcamp is showing in the numbers. It showed in the accelerated acquisition in customers. So Q4 of commercial revenue growth plus 32% year on year, US commercial revenue growth plus 70% year on year. Their customer count increased from 143 to 221 on a trailing 12-month basis, and their total commercial customer count on a trailing 12-month went from 260 to 375, and that's a 44% year on year growth rate. And to add icing on the cake, Alex Karp, who's the CEO of Palantir, said that the demand for LLMs, which are large language models, continues to be unrelenting. Expansion and growth have never been greater, and this essentially instills lots of excitement and confidence to the investor base, basically echoing the thoughts that we are at the start of this AI adoption S-curve. Now, general cost controls are okay. Sales, marketing, general and admin expenses actually grew at a slower pace compared to revenue growth. They also put in continuous effort to build out their R&D, which is essentially the lifeblood of Palantir. And it's the economic mode that guts the business. So stock-based compensation did slow significantly at around 15.7% year-on-year. More importantly, they also have a very strong balance sheet with around $3.67 billion in cash and $746 million in current liability. Now, moving on to the not so good points that I think serious investors should continue keeping a lookout for. So firstly, I believe that this entire AIP bootcamp is indeed a game changer. In order for them to structure and come up with something like that, they probably understand the pain points of a prospective client. And in their entire client acquisition funnel, the first step of all these prospective clients are probably the greatest challenge. So by being able to bridge across this information gap and this knowledge gap, it allows for a much smoother transition for them to commit to many of these multi-million-dollar contracts. So two things that investors need to take note of. They need to continue monitoring this acceleration and ensuring that what Palantir is doing in terms of customer acquisition efforts continue scaling and continue answering many of these pain points. And number two, although customer acquisition is important, but it's just first half of the equation, they need to also focus on retention. And Palantir is in need to prove to investors that they're able to acquire at scale and retain at scale. And on point number two, it's just a personal opinion. I'm just a tad bit allergic to many of these adjusted figures, even though I understand that Palantir is currently at their early stage of development and essentially in their growth stage. And of course, the pushback to this argument is that you want employees to have huge skin in the game and you want to reward them handsomely so they can attract the top talent. And in fact, the trend of share-based compensation has been going down over the last few quarters. So this is exciting signs. And on the point on adjusted figures, the income from operations is actually 65.8 million, but if you have to add back the share-based compensation, the adjusted income suddenly goes up to 209 million, suggesting that they have a 34% margin. And if you were to actually peel the layers and judge Palantir purely from the income from operations without the share-based compensation, I think this margin is closer to 10%. On another note, I think the interest income is also propping up the bottom line by a very large extent. So let's also not forget, Palantir is a tech company, at least that's what most people like to know them of. And their Q4 interest income is 47.7% of their net income. And the full year for 2023 is 63.2% of the net income. That said, I believe this downtrend is going well as their core business continue printing cash. And that's also because they're holding a huge amount of cash on their balance sheet, which is $3.67 billion worth of cash and cash equivalent. It also probably signals to investors that, hey, we are ready to go for war. We have a huge balance sheet to weather any storm ahead. But that said, I believe that as a growth company, they should be reinvesting at a much higher rate internally with greater potential. And last but not least, of course, the revenue guidance by management team is coming in at right around 20%. A far cry from the previous 30% growth rates that many people were expecting. So we kind of have to adjust our expectations and to project forward. So the biggest question on most investors' minds right now is Palantir a buy? So I think a question that I like to ask most investors is, in the next 5 to 10 years, what won't change? So firstly, I believe that private enterprises will always want to one-up each other. This also suggests that they continuously want to drive profitability and to drive efficiency. So this translates to a great transition towards integrating and using AI for their business capabilities so as to one-up each other. And this is a huge tailwind for Palantir's core business. So time will determine if Palantir is the player that is going to capture most of this market share. And if so, if they're able to prove their capabilities and superiority in terms of their product offering, they will then be the go-to platform for AI integration. And this is going to be the core of the business, the mode of the product. Let's ask ourselves, how do we value Palantir today? I'm going to use two specific approaches in terms of valuing Palantir. One, it's your traditional DCF approach. And number two, I'm using a relative valuation. So I understand that using a traditional discounted cash flow model might not be the most appropriate, especially for a young company in their growth stage, like Palantir's case. However, I think the underlying mental model around using a DCF is simple. You are basically discounting all future expected cash flows. And by using a DCF model, allows you to have a feel and a greater appreciation of the expected cash flow to come for 5, 10, or even 20 years out. And essentially what is being priced into the valuations today. So this is essentially called the True Value Finder by Piranha Profits, and I'll just quickly walk you through on how you can essentially use this model itself. So you basically just put in the name of the stock and the stock symbol, and you just need to input a few variables before the model actually spits out an intrinsic value. What you need is essentially 6 variables. Firstly, it's the operating cash flow on a trailing 12-month basis. Secondly, it's the debt profile, usually the short-term and long-term debt. Thirdly, it's the amount of cash that they have on their balance sheet. Fourthly, it's the assumption on your growth rate for the cash flow from year 1 to year 20. Fifth, it's the total number of shares outstanding. And number 6, which is the discount rate. So I'll quickly walk you through how to use this model. First, let's look at the operating cash flow. This is the figure on a trailing 12-month basis that they provided. I believe that this is an adjusted figure because they have to compensate for the huge amount of share-based compensation. But let's just presume that Palantir is able to generate this amount of cash flow moving forward. And in terms of the debt structure, I believe that Palantir does not have any short-term or long-term debt. So this $209 million is essentially the customer's deposit on their balance sheet. So they have $3.67 billion worth of cash, which is crazy. So in terms of their growth rate, I think it's up to anyone's guess. But at least based on Alex Karp's commentary, he seems fairly confident in terms of the demand and uptake of Palantir's core offering. So having a 20% year-on-year growth rate in the upcoming 3 years, I think it's no problem for Palantir. So I did extend this 20% growth rate from year 1 all the way to year 10 because I think we have to understand that Palantir is currently in their growth phase, and this current operating cash flow of 712 million might not be their full potential as they have not yet achieved a great amount of scale to kind of boost their margins. But of course, I still have to work with a number. So that's why I expect Palantir's growth rate to continue extending at 20% year-on-year for the first 10 years. And right after that, for the subsequent 10 years, they're just going to grow right along GDP figures, just a little bit more. So the number of shares outstanding, you can quickly Google it. And in terms of the discounting rate, using 8.1% because Palantir do have a beta of more than 1.6 times. So that's why we use a discount rate of more than 8.1%. Some of you might ask, how do you find the beta figures? You can just Google Yahoo Finance Palantir and you get the figures. So long story short, after giving in the inputs of these 6 figures, the model actually spits out an intrinsic value of $14.13. And based on the time of this recording, Palantir actually closed at around $23.60 per share. And that's essentially a premium of 67%. So I know that this might not be extremely representative of Palantir's real intrinsic value because on primarily 2 fronts. Number 1, I think in terms of the operating cash flow, which is the starting figure, it has a very, very important impact in terms of how we reach to this valuation. To give you an example, because now we are using 712.2 million, let's say we are using $1 billion instead. So at $1 billion starting operating cash flow, you can see that the intrinsic value is at $19.24. Palantir actually is only overvalued by 22%. So why is there such a huge disparity? Probably because Palantir is not matured enough, and due to the nature of their maturity, the margins on their operating cash flow might not be representative of the business. So that's on point number 1. And on point number 2, it's of course the expectations of the growth rate on the cash flow. So let's not forget, currently we are only at the start of this entire AI curve. So similarly to Nvidia, for those of you who actually followed them, you saw that there was an explosive growth rate to the upside because they essentially reached that critical inflection point. So I'm not guaranteeing that Palantir will see that same inflection point, but I'm just suggesting the potential of Palantir being one of the key important players in this entire industry, and they might be experiencing this sort of explosive growth rate as well. If assuming that that explosive growth rate comes in the subsequent 5 years, from year 6 to year 10, and you just put a 30% growth rate, you can see that the intrinsic value per share has actually jumped to $18. Starting the model at $1 billion operating cash flow and using the assumption of 20% for the first 5 years, 30% for the next 5 years, you get an intrinsic value per share of $25.60. And that might even warrant Palantir a buy today because it's basically undervalued by around 8%. So I think this exercise of a DCF model really allows you to have a greater appreciation of what the market is basically trying to price in today, so that you can play with the different assumptions and to get to a place where you're comfortable buying at the valuations because you're comfortable with the assumptions that are being priced into the stock. So I hope that this explanation is simple and clear enough for you. And for those of you who are interested in the True Value Finder provided by Piranha Profits, We are currently running a promotion, and I'll leave the link in the description box down below for those of you who want more details around the True Value Finder. Now, moving on to the other tool, valuation approach. It's under the umbrella term, which is a relative valuation. Basically, you are trying to compare how Palantir is standing amongst its peers and amongst its own historical comparison. So this screenshot is actually grabbed from Guru Focus. So they actually pitched Palantir against their other SaaS competitor like Fortinet, Cloudflare, CrowdStrike, and Splunk. So you can see that Palantir is this green circle over here. So it's not necessarily the most overvalued, but it's also not very undervalued per se, comparatively speaking. So they are essentially comparing them on an EV to revenue multiple. So EV is enterprise value. Basically, it's the market cap less cash at debt to essentially account for the capital structure of the business. And it's a more sophisticated way compared to price to sales, which doesn't really account for their enterprise value and their capital structure. Palantir has a 20 times EV to revenue, while there are some trading at EV to revenue of more than 20 times, while the others actually trade less than 10 times. So I think if you ask me, is Palantir expensive or not compared to its competitor, I think this is not very telling because firstly, the competitors are not really in the same space as Palantir, because I believe that CrowdStrike and Fortinet, they are in the cybersecurity space. Moving on to compare Palantir from its own historical perspective on an EV to revenue multiple as well, they are currently trading right around 20-21 times. And their median is 15.5 times. And let's also not forget, when Palantir was in its lows, between the $6 to $10 mark, they were trading much closer to 6 to 8 times EV to revenue. And that was arguably, in hindsight, the best time to accumulate Palantir. Right now, at over 20 times EV to revenue, personally for me, I do think that it's a tough pill to swallow, but that's just my own personal opinion. So I think generally, here's the bottom line for Palantir. The investment case for Palantir is still the same. So do they have a superior product? Are they able to continue achieving scale? So there is certain commotions around Palantir being a consultancy company. So comparing a consultancy company versus a SaaS company, it's a very different growth trajectory. And if Palantir is able to continuously prove to investors that they have the ability to scale, then they definitely command a much higher premium. And of course, their offer has to provide so much value that competitors cannot ignore. For now, it seems like they have been gaining a lot of grounds in the healthcare space and they're onboarding more and more healthcare partners, which is a good sign to start. And Palantir have to continue improving and innovating on their products and services, and ultimately, it has to translate into numbers. Given that how they're valued today, I believe that many investors are expecting a lot. Do feel free to leave in the comment section down below on what you're expecting of Palantir. Feel free to smash the cute little like button and subscribe as we provide more updates for you in the coming future. With that, this is CK from Piranha Profit signing off. Till next time, keep winning.